Hi everyone, and welcome back to my channel, Financially Fit with Katie. I hope you're all doing well today. So I want to ask you, over the past, say, 6 months or, last few years, or it could be within the last 10 years, has there been a time that you have felt any kind of anxiety, felt anxious, maybe had some sleepless nights, all because of what's going on in the stock market? If you have, you're not alone. Majority of Americans at some point in their life have probably felt this way because, if you were around during 2008, we saw the market drop 50%, and just this year alone, it's been quite a wild ride since January. And if you're saving in through your employer plan, through your paycheck, or you've got outside investments or a Roth IRA, you're thinking about that hard-earned money, and now all of a sudden you're nervous. Is it all going to go away? So what I wanted to go through today was just to give you a couple of tips that you can do, ideally to kind of look at, when the markets are a little bit stable, that are going to help you as we experience market volatility, or if we experience another large drop in the market. So, we'll talk about having a balanced portfolio, resisting panic selling, considering maybe taking advantage of some of the losses if you have that type of an account, and I'll get into that more, protecting your nest egg and what you have, and focusing on the long term. So starting off, keep a balanced portfolio. I'm sure you've heard, make sure that your accounts are diversified. Do not have, everything invested in one type of security. So why is that important? Well, usually within the market, some things will be up, some will be down. Now, this year, pretty much everything had come down, but things don't all come back up in the same manner. So you want to make sure that your portfolio is balanced and that you've got your money spread out across different sectors, different asset classes. Now, if you're just starting out and maybe, your portfolio isn't at a level that you would be buying, specific, variations of different mutual funds or stocks to create a diversified balanced portfolio. There are many different mutual fund companies out there, Vanguard, Fidelity, that have really great balanced fund options that you can use, and I highly recommend that you would check into some of those, because they're going to make sure within that you've got a portfolio manager who is managing that. Now, if you're working with an investment professional, just make sure, the type of portfolio that you have that level of diversification, and then also within your 401k. Now, with the 401ks or 403bs, if you're unsure about investing, they have, the age-based or the target dates, and those are set up in diversified portfolios. So they're taking care of some of that for you. So it's just, at this time too, making sure that you know exactly what you own. It goes a really long ways, especially when we see declines in the market. Now, next, you really want to resist panic selling. We know, over history, that even in the worst time in 2008, things come back up. So you want to make sure that the way you have your money invested, that you're comfortable with, whether it's specific stocks or if you're in mutual funds, exchange traded funds. You want to know what you have, and you want to be comfortable with that mix, because if the market drops, you do not want to have to sell when things are down. Because what does that mean? If now all of a sudden you sell and you're like, I'm going to get back into the market, well, if how you were invested before, maybe it was a moderately aggressive portfolio, but you were nervous at that. If now all of a sudden you decide that you're going to go back into the market and you're, conservative on that, you may never make up what you've lost. So you really want to avoid any of that panic selling. And actually, if cash flow is good and it's running positive for you, look to take advantage of some of these drops in the market. If you have a 401k, a 403b, if you're saving into an outside investment account or a Roth IRA, increase the amount that you're saving. Take advantage of the drops. Think of it, as the stock market is on sale. So if you are out shopping or you want to buy that pair of shoes that you like by that designer and they've got a good sale, you're going to pick up more when it's on sale. you want to think about that on, your dollars that are going into the stock market. So if you're in an employer retirement plan and, cash flow is good for you, think about going up a few percentages, because that, over time, as the market starts to come back, well, you've been putting in more while things were down. You're going to see your portfolio come back a lot quicker. Now, if you're saving it into an investment or a non-qualified type account, so these would be the accounts that, you have to think about when you're making a sale. Do you have a gain? Is that going to be a long-term gain, short-term gain? Income, any dividends that are received in this account, you're going to receive a 1099 at the end of the year. Well, if you've got losses in that account, you may want to take advantage of what's called tax loss harvesting. Go in there, find certain positions that you might be able to make some sales, recognize that loss. Maybe that will offset some income that you've received within the portfolio, maybe offset some gains that you might be carrying, or it will just flow over and it will offset income on your tax return. So usually advisors will take a look at these types of portfolios, that November, December timeframe, and do some sales so that they can take advantage of those, which can help in turn reduce taxable income that you would have to report on your taxes. So if you're unfamiliar with that, talk to your CPA or talk to an investment professional. Now, protect your nest egg. Make sure that what you've got invested in the market isn't everything that you own. You want to make sure that you've got outside savings accounts set up, so you've got enough in savings to cover you, whether it's on 3 to 6 months. Maybe you've got another second layer that covers you out through the year. If you're getting closer to retirement and you're nervous, like, oh, the market is dropping, well, you want to make sure that you have money that's set aside. So again, it's looking at these portfolios and trying to plan ahead, because if we had a crystal ball, we could, know when the market's going to drop, and we just do not know. So if you're in a position where you're thinking of retiring in a couple of years, you might want to actually hold more in cash, whether it's cash out on the sidelines or cash within your 401k or 403b. Maybe you've got it in a guaranteed income type account, so you're earning less on it, but if we saw a decline in the market, that's where you're going to pull it from. So it's just trying to plan ahead and making sure that you have money on hand that you can tap into, because again, you want to resist having to do any type of panic selling. And also look at what your, risk tolerance, look at your, time horizon. Make sure that all of that is matching up to how the portfolio is set up. And if you have questions on that, again, ask your investment professional or reach out to someone that can help you. And then focus on the long term. So know that, if you're 25 or 35 and you're investing in your employer plan, or you've got a Roth IRA, and you're not going to need that money for another 30 or 40 years, even 20 years. Know that, if the market goes down, again, think of it as the stock market is on sale. Have your money work harder for you. Aggressively try to, pick up additional shares. That will all help you. Now, if you're getting closer to retirement and you're like, oh my gosh, I was going to retire next year, and now, what am I going to do? My portfolio is down 15%. You want to hold steady with that investment strategy. Again, have money that's set up outside that you can touch if that is to happen, because think about it. Even if you are going to retire in a year, you're not going to just liquidate your portfolio and take everything out. You want that money to last you through retirement, which could be another, 15, 20, 30 years in some cases. So again, it's just making sure the portfolios are set up in a way that is aligning to what your needs are. So again, it's all about that planning and really knowing exactly why you're in the market, what it's going to be used for, and reviewing it. The accounts don't need to be looked at on a daily basis, but you should be looking at your investments account, your 401ks, at least on an annual basis, and maybe even at that 6-point mark. And you want to make sure that you're making changes as they need to. as things are changing. So I hope this has helped. You know, if you have not subscribed, if you can do so, hit the button. That will let you know when new videos are up. If you think this could help someone, whether it's a coworker, a family member, if you know someone who was a nervous wreck over the last few months, which, you know, I don't blame them if they were. It was a very stressful time. Share this video with them, and I'm hoping that through it, you know, maybe they can pick up something that I said that's going to help them, you know, in their own lives as they move forward. If you have any questions, my contact information is listed below. Feel free to reach out to me, and I'll help in any way that I can. So until next time, everyone, please take care, stay safe, and I'll talk to you soon. Bye.